are there, and we have to sort of live with that and allocate or uh, allocate at valuations that we want, which covers this risk. So regulatory risk is one, and we have very high government intervention and regulatory risk here. Another thing I want to mention is, while one part of the government is sort of maybe finance ministry wants to benefit out of these windfall taxes, another part of ministry, that is Department of Hydrocarbons and all, they have been expediting this process of giving clearances and all. So to some extent, at least one part of government is working on to help private players participate better. So that's a little bit of offset for that risk. Second is asset concentration. As we know, delays happen, BAT production doesn't happen, PY1 goes off. So those are the asset concentration risk. It's not like the production is spread over multiple fields. If something happens to BAT, then again, you might not even get an exit. Then there is oil and gas prices, which are very unpredictable. In general, my opinion is over next few years, the oil prices might stay at elevated levels, or energy prices in general. Key man risk, Elango, and I'm not sure if they have been able to develop a management bandwidth who can sort of run multiple assets at the same time. And if you are dependent too much on the same guys, it becomes a big risk if they choose to retire at some point without having enough management bandwidth that can be so that company can run smoothly going forward also. And especially because these guys are smart operators and capital allocators, that key man risk sort of increases. And then there is one thing that keeps on coming to mind, that hydrocarbon or oil and gas, entire all the transportation will become electric or hydrogen or whatever. So hydrocarbon obsolescence is a risk, but I think that's a risk for a longer term, and it might play out in a much longer term than we anticipate. So in my opinion, oil is still here to stay for at least next 5 to 10 years. And as someone asked, HDFC has been a big seller. So that will be sort of overhang on a stock. Whenever stock prices go up, HDFC might want to exit. And obviously because of this merger and all, and ESG concerns again, they are planning to exit. So that is a sure, like around 6.5% of the price of the stake is going to get offloaded in the market. So at some point that will happen, and they have reduced it from 11.5 to 6.5 now. But if that aligns with BAT coming online, then I think that risk reduces to some extent. But if BAT gets delayed further and these guys are wanting to sell, then the stock price might face that brunt. So these are the risks that I understand from this situation. Any questions on this?
No, I don't see any question. And my only point over here was, so as I think if that BAT comes online, then actually as an investor you would want HDFC to sell everything, right? That's a
Yeah,
good point only. So that's not a risk actually then.
yeah. If BAT comes online, that is the factor.
If BAT comes online.
Yeah,
So that's
but
a good thing only. So say for example, if both these things happen, as in say in the next 1 month, BAT comes online and the stock goes up. Just hypothetically speaking, things can go completely different way.
yes,
And then HDFC comes and sells a large chunk of shares. Then naturally the share price will come down. As an investor, you should be at that point of time probably buying it, right? That's a good thing to have happen to you because of one technical reason the stock is going down, where the business prospects have actually improved, right?
I agree with that. So that might be an opportunity when, if and when that happens. So even if before that happens and you feel that BAT comes online, then it might still be a good buying opportunity.
I see Dhruv raising his hand. I'll just unmute him. Yeah, Dhruv, please go ahead.
Nice. So I believe just like all of us, even HDFC is probably waiting for the BAT to come on board so they can get a higher price and they can exit. And yeah, that is something that is very plausible because they are an institution. They would and since it's their company, they would have a better overview of how things are playing out on ground. And yeah, that is a big possibility that they might just exit once that comes on because it's a big chunk that way.
Right.
I think
So
Chitresh
then,
has again raised his hand. Shall I take his question,
yes,
Manan?
please, please, please.
Yeah, Chitresh, please go
Yeah,
ahead.
but on a contrary, HDFC Securities is giving buy calls in the HOEC and upgrading the target price and all.
Operating the target. Okay.
No,
So
they have
yeah, it's in like one part of the thing wants to sell, so another part it makes sense for them to give a buy call, right?
That's how probably the things work, right?
Yeah, incentives are very high for. See, I'm just drawing a line where there might be no line and they might be operating under Chinese walls, but it's just like uh, I don't give too much weightage to sell side recommendations as such.
Right. So I think Kailash has also raised his hand. Kailash, please go ahead.
Sir, actually, my question is actually on this oil and gas prices, sir. Actually, sir, can you imagine any scenario actually, where things happen in a way, that gas prices, what we are seeing, for the foreseeable future, maybe remaining at elevated levels. So can there be any scenario or what would happen actually if I'm the natural gas user? What could happen actually which may bring, the gas prices, to a much manageable, levels or, reasonable level? So can you see any kind of a scenario panning out, next 2 to 3 years?
So I didn't understand the question. So scenario relating to if the prices go down, or I don't understand.
Yes. For the gas prices, because the way actually the things stacked up are actually, maybe $15 or $16 kind of a, prices are being predicted. But what could happen actually, which could actually, bring the things on the other side of the table? So are there any kind
Yeah,
of a,
see, even if those things happen, the cost of production for these guys are very low. So they will still be profitable. Obviously, market will not give them the multiple if versus if the gas prices was at 20, gas prices at $6, these guys will still make money, but market might not give them the multiple. So that appreciation might not come in. So in my risk reward scenario, I have assumed and I'll show that to you. But there is a chance. So we never know what can happen in the future. But yeah, my bet would be, and obviously I am invested in this, so it implies that I feel gas and oil prices should stay high. But even at low prices, because the cost of production for these guys is very low, these guys will still make profit. Even at $1.79, these guys were reporting profit versus ONGC and Oil India were reporting losses, huge losses, right? So yeah, then obviously your reward from this investment changes drastically if prices go down.
And sir, last thing, sir. Actually, that is from the HOE's, actually stock investments point of view. Actually, if I were to ask you, actually, from a broader perspective, actually from the user and industry side, so and overall global prices side. So, what kind of a things actually, could actually, work it out in a way actually, so that actually